Good morning. I'm Brian Fernandez, and our guest today is Vasu Menon. He's the Executive Director, Investment Strategy at OCBC Bank. Vasu, welcome to the show.
Thank you, Brian. Thank you. Thank you for having me on the show.
Now, Vasu, with China's strong economic recovery, the signing of RCEP, and the Biden victory, what's now your view on Asia?
I think we are positive on Asia. We've actually upgraded our call on Asia from neutral to overweight. And those factors you mentioned were factors that contributed to our upgrading of the Asian call from neutral to overweight. So China is clearly on a recovery path. In fact, it's one of the strongest economies among the major economies, both in 2020 and 2021. I think China is expected to grow at about 2% this year, which is the only major economy expected to post positive growth this year. Other major economies or major regions like Europe, US, Japan, they're all expected to post negative growth in 2020. And China is
So where is the bulk of that growth coming from?
Well, the bulk of the growth is really coming from, the domestic market. I think the Chinese government is focused very much on the domestic market, their dual circulation strategy, where they want to emphasize import substitution, greater domestic investments, greater domestic consumption, less reliance perhaps to some extent on the outside world. And I think that's contributing. Easier fiscal policy, easier monetary policy, better management of COVID. All those have contributed to the Chinese recovery, taking a strong foothold. And I think that's one reason why we turned positive in Asia. Of course, with Biden in charge now, it's less confrontation in China. Again, it augurs well for Asia. And finally, with Biden in charge, it's very likely that, risk assets will appreciate. US dollar weakens. And typically in that sort of backdrop, the more risky asset classes like Asian equities, emerging market equities tend to do quite well. So they're all coming together quite nicely. Like you mentioned, the China recovery, RCEP, plus the Biden victory, all coming together to basically provide the boost for Asian markets, and probably there's more upside for Asia over the next 6 to 12 months.
And also the other upside is really that new vaccine for Moderna, which has a 94% efficacy. And that's obviously been a big boost for Asian markets. But Vasu, drilling down a little bit more, what are the specific equity markets and sectors that you like?
Well, I think the vaccines are going to benefit risk assets overall, right? Because I think it's going to result in less restrictions, a pickup in economic activity. It's not going to happen overnight. Let's not kid ourselves, Brian. I mean, the vaccines are still in development. We could see something by maybe the first quarter or second quarter of next year. And it takes a while to produce all that vaccine, get it out to people who need it, win the battle, the mind battle as well, because people have to be comfortable that the vaccines are safe. So we're still quite far away from the vaccines really translating to, bringing COVID down. But nevertheless, there's optimism. And essentially, I think the vaccines will, result in greater economic activity, boost confidence. And I think, if you look at the markets in Asia that we like, essentially Singapore, we like Singapore. I mean, Singapore is doing a fantastic job in managing the COVID-19 virus. Singapore offers very high yield. It's a market that's very focused on value and cyclicals. And those are the segments of the stock market that are now seeing a revival. And of course, the other markets we like are Hong Kong and China as well. And China is something we spoke about earlier.
And China, where specifically?
Well, domestic China is clearly one area that we like. The services sector in China, hospitality, travel, not just in China, but also in other parts of the world. I think the hospitality sector is going to get a boost if we successfully rein in COVID-19, especially with the help of vaccines. So travel, hospitality, domestic consumption, several areas. So no one particular area that we like, but, perhaps the underdogs have been travel, hospitality, and those could actually see a pickup.
Now, last month, Vasu, you highlighted some risk in the coming months to the global economy. Now, that ranged from a delay in passing the fiscal stimulus bill in the US, which has happened, Brexit, which is still ongoing, and also the escalation of COVID-19 infections in the US and Europe. Now, how have recent developments then tempered your view?
Well, recent developments have not totally removed those risk factors. Those risk factors will still be there. but the sentiment is now turned more positive. The Biden victory, once it's a sealed and done deal, means that Biden will then be able to negotiate with Congress to launch a fiscal stimulus package. Not be as much as what he wants, which is $2 trillion, maybe something less than that. But nevertheless, if they get going with the fiscal stimulus package, that reduces one element of risk. If Biden does a better job than Trump in reining in COVID-19, as far as the US is concerned, again, that will be a source of comfort for investors. Brexit, it is still ongoing. Markets are very hopeful that a deal will be struck, if not in the next few weeks, in the final hour. And so again, those factors will be there. It will take a while for us to remove those risks completely, and they will create a bumpy road ahead. But I think right now, with all the liquidity on the sidelines, the pickup in economic activity, modest as it may be, is fueling optimism and resulting in stock markets slowly heading higher.
Hey Vasu, thanks for your insights. We've been speaking to Vasu Menon, Executive Director, Investment Strategy at OCBC Bank from Singapore on BizDay Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for